that you could purchase, and that is none other than DraftKings. Now, DraftKings specializes in online sports betting, and I want to go ahead and take a look at the performance of this stock over the last couple of months related to this global pandemic. So DraftKings went public last year, and they were trading for around $10 per share for a period of time. Then, around the time the pandemic hit, this stock went soaring from around $10 per share to a high of somewhere around $40 per share. Now, the reason why this stock took off is because the online gaming team. One thing we're going to talk about with DraftKings is that this company lost over $100 million in 2019, whereas with Golden Nugget Online Gaming, this company is already profitable. We know this is the first online gaming company to launch live dealer in the US. They've won industry awards as top operator, DraftKings, and this headline here says it all. DraftKings posts sizable net loss in 2019 despite major revenue growth. So revenue is growing like crazy, but they lost a lot of money. DraftKings posted a $143 million net loss for 2019, despite a 43% rise in annual revenues. According to their filing, revenue came in at $323 million, but the losses pretty much doubled year over year. So let's punch this number into our calculation here and see what kind of multiple this stock is trading at times their anticipated revenue. And we know that DraftKings had $323 million in revenue for 2019. But let's consider what the current market cap or market valuation of this company actually is. So currently, DraftKings has a market capitalization of $10.94 billion to DraftKings, in that it is worth 33.9 times their anticipated revenue for 2021. What exactly would that look like? So if Golden Nugget does in fact earn $122 million in revenue in 2021, and if it carried the same revenue multiple as DraftKings, this company would have a valuation of around $4.1 billion. Now,
at this price point. All right, next stock on the board is DraftKings, and this is one of my few like Robinhood plays, if you will. I don't trade on Robinhood, but DraftKings is sort of known as a Robinhood stock. But just like DraftKings, the platform, it's been sort of a fun one to bet on. All right, looking at the tip ranks dashboard for DraftKings, we have 9 buys, no holds, median price target of $47.63, which is up about 30% from where we stand today. High bar of 60, low bar of 25. The opinions on DraftKings are all over the ice. It's very hard. You basically have to make your own decision, right? This channel, DraftKings and Penn National Gaming have made big headlines this year. DraftKings, of course, with their IPO, Penn National Gaming with their acquisition of Barstool Sports. And with that acquisition, you might have seen a guy, Dave Portnoy, who's been a long-time part of Barstool. And funny enough, with the disappearance of sports, Portnoy's been a big player in the stock market. Should be worth more than DraftKings stock, significantly more, as a matter of fact. He says 3 times as much. So we're going to take that statement to heart. To take 2 to 3 years. So some of these other metrics like EPS, dividends, and whatever, just they don't come into play right now. All right, now let's compare Penn National Gaming and ticker symbol PEN for longer than DraftKings. And you see in that year to date, they've hit as high as $40, went down with the pandemic. And revenue over the trailing 12 months, we have PEN at $5.13 billion, DraftKings only $323 million. Somebody who's going to continue to buy DraftKings stock, here's the reason why I like them. And I can tell you reason number 1 is I've been a daily fantasy player for a long time. So I'm super familiar with DraftKings, and that is one reason that I'm investing in them. Even though here in Ohio, we do not have access to their sports to their sports book on the app. I've been to Indiana, a neighboring state which does, and I got to tell you, it's pretty slick. Everybody else. And you'll notice right off the bat, it really has nothing to do with physical locations, right? They're talking almost everything about their mobile sports game, because you probably noticed that DraftKings is the sole representative for the NFL out of all the sports books in daily fantasy. Well-known sports brand, large database of users, quality user interface. And to compete, Barstool, Penn and Barstool must have a widely recognized sports brand, media integration with a large audience, best-in-class product to be at least as good as FanDuel, DraftKings, so that they can try to compete with these folks. On the DraftKings side, though, right now we have 9 buys, no holds, no sells, median price target of $47.86. That's up 27% from where we sit today. Most of these tip ranks analysts are looking about 12 months use of DraftKings. Are you siding with that branding approach instead? Number 2, it's important to note that if you went on basic stock fundamentals, you know, Penn is driving a lot more revenue right now. Okay, $5 billion. Penn has massive exposure to that. DraftKings has some, it's mostly like co-branded casinos, but do you see Penn's physical casinos as an asset or a liability? Certainly this year, it's become a monster liability because of how much it costs to lease these spaces, but in the future, do you see folks going back, and could they possibly make up for DraftKings' potential mobile domination? And please give me a like and subscribe if you enjoyed this video. Is an existing holding that I added to, and that is DraftKings. DraftKings price right now of $33.91. I've bought several lots of DraftKings over the past 60-some days. I knew that DraftKings had an earnings report coming. There was a side of me that thought that earnings report would be positive, but at the end of the day, it was actually not super positive in terms of year-over-year comps by Christmas time of 2021 as more states come online with gambling. All right, next stock on the board, PayPal.
A day off. I assume that you have to be in tune with this. I mean, DraftKings, of course, had that deal. Of course, what type of activity are you seeing around this golf tournament and I guess the general outlook for it?
Well, you know, the Masters was never in November before this year, so we were all very interested.
Across the tape, Palantir, DraftKings, Tesla, story-specific stocks right now. To the downside, your biggest decliners right now, GoodRx, Walgreens, CVS Health, not necessarily story-specific, unless you want to call Amazon a big story. Carol.
I'm going to show you behind the scenes on DraftKings all season playing these daily fantasy contests. You can see right here, my current balance or the amount I have to play is $61. These little crowns and tickets are a lot of stuff with DraftKings and fantasy sports in general. So that is where some of my background comes from and ready to go. So that's the daily fantasy side of DraftKings. Now on the sportsbook side, this is the future, okay? And again, I can't play these games, but they've gamified it to a point that it really is addicting. You can see right here, what's this no-brainer, Thanksgiving no-brainer, any sports. Now an often overlooked play in the DraftKings mobile sports betting is they do have casino games too. And yes, you can play these on the app, online slot machine. So they gave $1,000 turned into $877, which means DraftKings, you know, made $123 in the 2 minutes that I spent there. Granted, I was being a little goofy but you get the idea. Okay.
Video. So let's get started. First on my list is DraftKings, stock ticker DKNG. This is an American daily fantasy sports betting website. They're the official daily fantasy partner of the NFL, and they were started in 2012. Right now they are trading at $52.75 with a 52-week low of $10.05 and a 52-week high of $64.19. So obviously 5, 1 being a strong buy and 5 being a sell. DraftKings is currently rated as a 2.2, meaning it is a buy. And the current analyst average price target is $60.27, which is about 15% higher than the current price of $52.75. There's no denying that DraftKings stock is quite expensive right now, but is it trading at a premium compared to where it could be next year? A big reason why there's a lot of hype for the stock is because of the growing sports betting industry. About half of US states have legalized sports betting, and DraftKings is operating within about 10 of those states. So for me, I am pretty optimistic about the sports betting industry. I don't think it's something that should be banned as long as specific procedures are in place preventing people from losing their life savings. Official sports betting partner for Mike Tyson's boxing match versus Roy Jones Jr. And more events like this will set DraftKings as the standard for sports betting. A really great time to get in. But long term, this should still be a good stock to pick up in the
For me in particular, there is a very strong association with DraftKings, which is another stock that I have purchased as well. So there's definitely some kind of parlay play to this, if you will, from my standpoint. I don't know a ton about that world, but I do know that that world is growing. Channel. My name's Jeff Beers. Today we're going to dig into DraftKings stock, sort of look ahead at DraftKings stock for 2021. Position relatively to start with, they bought about 600,000 shares for almost $34 million. But for DraftKings, this is more of a, nod in the right direction that, hey, people are taking notice of what DraftKings is doing on the EPS for the end of 2020. And for next year, they'll add about 75 cents to their earnings per share, bringing that up to be frank, though, one that we're expecting out of DraftKings for the next, 2 or 3 years. All right, and a quick note on earnings and EPS. This is from an Argus report in December of 2020. But I think that this is an interesting look ahead. So that's actually better than we saw on Yahoo. And Argus is saying we expect DraftKings to have its first profitable quarter in 2022. Once the company turns profitable, our forecasted 5-year earnings growth rate is 25%. All right, looking at the TipRanks dashboard to see where the best performing analysts see DraftKings. My affiliate link for DraftKings is in the description if you want to check out the platform and learn more about it. And we always sort by best performance that it can go higher. All right, so should you buy DraftKings stock today if you're not already in it? And I think there's two sides to that story. I would say if you're hoping for big profits over the next 12 months, then I would probably stay away. Content.
And who's going to be very in the know about it. Jason Robbins, DraftKings CEO from a very cold Boston. Wonderful to have you with us, Jason, as always. Talk to us about what are you expecting, numbers, projections? Give us the data because our audience loves it.
Oh, we're in a quiet period, so I can't talk specific projections, but what I can say is only
market. How do you see yourself competing against the likes of a DraftKings, and how do you retain your market share with more competition?
Sure. So we've been very fortunate in building a #1 position by a significant margin over the last 2 or 3 years. And we did that by doing 3 things. One is being fan focused and making sure that.
Interesting. I want to ask you, obviously, DraftKings is a big rival of yours in this business, and that's a stock that's up something like 250% since it went public, and it did so through a merger with a SPAC. I'm wondering if FanDuel has any plans for a spinoff to go public, and if you did so, if you would also consider going the SPAC route.
Historical track record that we can go by. But I've got an example with DraftKings where I'll show you one way that you can do this. for those situations. For PayPal,
a lot of the companies that I've looked at, such as DraftKings, I'm not a huge fan of personally, not of interest. Here's one that's right close to home. And when I looked at the financial numbers, now don't get me wrong, before I even look at the financial numbers, it's foolish. It's a fallacy to think that with a
no longer than 2 years, really. I think DraftKings probably my most debatable play. Square and Roku. So out of those names, I do not own Roku and I do not own Melly, but I have studied them both, so I feel pretty comfortable looking at them. And hey, if you're on Twitter, so am I. So come over and showing up recently. Are we worried that DraftKings is going to take a major dip? All right, taking a look at the TipRanks dashboard to see what the best performing analysts think about DraftKings. And at the end of the day, you've got 3 buys and 1 hold. Price target's not too far away from where we are today, right? So a 65, 67. You did have a hold at 46. Keep in mind that this $46 could just be a pulse of the market and declining support for all hypergrowth. At it certainly over the next year or so. DraftKings at 48, Melly at 1,500, Palantir at 15, Roku at 340, Square under 200. That's not to say that these prices will happen for sure.
I haven't been providing as many updates on this one. DraftKings at an all-time high. Oh, that's exciting. Let's look at DraftKings. DraftKings. They've really gotten popular over this pandemic. I mean, this is a stock that has done so freaking well just over really the entire pandemic here. I mean, let's go back and look at this. So the thing must have spacked. Look at this for a moment. Do we have anything else going on?
And the internet bubble and the large cap growth names went down significantly.
DraftKings, Bitcoin. Okay, so as we talk about Bitcoin, it sells off a little bit. Is that how this market's gonna work? Yeah. Okay, so we've got some companies.
Next here on the stock chart, yep, we got DraftKings here. DraftKings just announced a deal with Dish Network, so they're going to allow now Dish's 11 million subscribers now to book directly onto their betting platform. So it's a win-win for both. And let's check in on Las Vegas.
That will continue to rally from here. Plus, DraftKings and Dish Networks teaming up to allow consumers to place bets from their TVs.
Insane. DraftKings 3%, that's not bad. Twitter 3%, this is stupid. But it's trendy, I get it. I don't agree with Facebook being this high. American Airlines, okay, recovery play, I could see that. Amazon, sure. Apple, fine. AMD, good. Netflix, I missed that. Let's see. I do not own DraftKings. Pretty sure we met if there was a launch at 420. SpaceX.
This will eventually become pay safe, and I highly recommend DraftKings investors, if you're into DraftKings, take a long, hard look at BFT.
Dish allowing customers to bet directly from their TVs. DraftKings will also be the exclusive sportsbook and daily fantasy partner for the UFC in the US and Canada. Shares of DraftKings up a few percent today, adding to stellar gains over the last year. Joining us now in exclusive interview is Jason Robbins, the CEO of DraftKings. Jason, good afternoon to you. Thanks for joining.
I told you they would not put Cathie first. They put 12 o'clock. Cathie's coming on. And then they show Cathie first. But I'm telling you, Cathie, watch. Just watch. This is how they do it on media. They know their numbers are up because, Cathie's going to come speak. We can break above that. Shift to Carvana is GNOG to DraftKings. Really holding up nicely.
Also bought in more than 800,000 shares of DraftKings yesterday on the dip, but also picking up some Teladoc the past couple of weeks as it's gotten cheaper. So these are the ARK Invest plays, and as you see, these momentum plays are having quite.
It's just the U-turn, and we find this a lot. Many more of these. We look at DraftKings, FUV, Arkimoto. Arkimoto actually, I think is. I thought it was low. I could be wrong about that. I don't
stock
remember.
Market analysis like this and other personal. All right, just in time for this video, DraftKings had their investor day yesterday, so we got in for DraftKings. And here's some more branding statistics that they provided money on marketing. and has numerous partnerships across almost every conceivable sports league. And this is a key to their strategy. So if you are not big on marketing spending to produce long-term sales, then you are probably not going to like DraftKings financial metrics very much. And that's people left who are either unaware of DraftKings and or do not have an account yet. And this is finally a summary of the importance of getting people into year 1, 2, and 3 cohorts. As you can see, these launch years, this is based on New Jersey, by the way, which was the first market to have both tiers, both online live. And all of this just goes to show you why DraftKings is a long-term stock. All right, taking a quick peek at DraftKings stock today, $63. And this is a 1-year chart, and we've had a lot of market weakness over the past couple weeks or so. And it's interesting because DraftKings had some good news coming out. Their EBITDA projections over the long term are coming in higher than expected, between 45 and 56 on the moving averages. Maybe you could settle in about 50 if you want to set yourself up for a potential the best performing analyst. Think about DraftKings. And we had our investor day yesterday. We had an earnings report come out 8 days ago. Right now, you've got most analysts in that $70 range. If we just take this top cohort of 6 or 7 names, 60 that are not yet profitable. DraftKings, just to pick a name out of a hat. I'm trying to think if there's another one. Unity Software.
By basically doubling, I mean doubling. DraftKings, 7%. Playboy's up 6%. Everything's just going up now. We've got FedEx is up. The Dollar General's up. We've got FTCV's up. That's eToro, the Dollar General. Plug Power's up. Neo's up. Neo's still under $45, though. Still cheap here.
Skills is down 4% right now. DraftKings is down 3%. Dimension down almost 8%. Jumia down over 6%. Ooh, look at Palantir. Oh, man, Palantir down 4% again. So,
me is that they are the payment provider for DraftKings as well as literally dozens of other sportsbook platforms, and that is. And believe it or not, this is my place.
Now, what about DraftKings? I'm pretty sure they're up this morning because I believe, yeah, they're up. Not much, but they're up. They got some good news on sports betting. What is it?
Yeah, also, I want to note that Axios reporting this morning, very interesting, that DraftKings held potential deal talks with the Action Network, which is a sports betting platform that analyzes odds, games, etc. So there's good synergies between the two. Also, Arizona and Maryland announcing that they were legalizing sports betting. So and that is good news for a company like DraftKings and the other online sports bettors. But DraftKings, the stock has really come off, Stu. We're down 20% from recent peaks in a bear market. So, they're looking for some sort of catalyst to maybe drive the stock higher.
Okay, got that. Thanks very much indeed. By the way, the Dow's taken a turn to the Southlands. Now it's down about 100.
It's like ChargePoint, with DraftKings a year ago that have been really successful and are probably going to be the template for a lot of these unicorn companies to go public maybe a little sooner than they had.
Well, cohort of red here, continuing their red, including ARC being down, DraftKings actually being down, XL Fleet down, Trimble, Palantir down again, NGA, Nordstrom, Unity, Pinterest. So overall, I feel like just a broader red day in the market today, especially with Amazon and Apple both being down just slightly over a third. We've got, these are Churchill Capital.
Sports and more sports betting as a result. DraftKings out with its numbers. The company's still posting losses, but it was a smaller loss than estimated, and revenue up about 250% more.
Yeah, DraftKings, really an interesting quarter for the company, now enjoying a full slate here for the first time in a while. And I guess the NBA is still kind of on an altered schedule. But, baseball is back. You've got the golf season with a full schedule, a normal schedule. But a way to gauge how bullish DraftKings is on any given cycle is, you look at their marketing costs, their sales and marketing, the S&M line. basically quadrupling from the same quarter last year. Certainly, you're not going to be spending into a sports shutdown, which is what most of the second quarter ended up. Some strange comps here through the rest of the year, but clearly DraftKings, I think in their minds, still leading and playing out the thesis that the market was so excited about, when they came public. What was that, a year and a half ago or so? And also, I always like following DraftKings because it's a nice gift to all of us as the initial and probably the most successful SPAC really began this latest craze. And so, for DraftKings management, we thank you for having brought hundreds of companies to follow in your footsteps over the last year.
And shareholders over at Expedia, Miles, are thanking their series of new executives here. Shares are up about 7%.
So what else do we have here? Beyond Meat, CBOE volatility's down, DraftKings down. DraftKings, I'm pretty sure, got upgraded, but they have been going down as well. Let's look at DraftKings for a moment. DraftKings. Let's just look at a little bit of a pattern here. What do we got going on? Golly, yeah, DraftKings has just been straight down the last couple months here, 2.5 months. DraftKings was such a great momentum play there for quite a while.
We're sure that you'll be there soon enough. Jason Robbins, DraftKings chairman, CEO, co-founder. Great to have some time with you. And a programming note, Bloomberg Technology speaks to the key policymakers, business leaders, and thinkers.
Boring. Neo, DraftKings, all down 6.6 to 7%. DraftKings. Oh, there's another good one. What is this? This one's been going down. Oh, Trade Desk. Yeah, Trade Desk been going. Trade Desk is so good. DKNG, DraftKings. What else? MViz. Didn't I already do MV? I'm pretty sure I did MViz already.
Okay, QuantumScape is in there, but it's DraftKings and it's UTS. It's pretzels and sports gambling. I mean, that is not the future of the world trade that I think the SPAC space has sort of marketed here. Another way to cut this tech sell-off, just very quickly, because I know we have a graphic for it, which is the stock.
First up, a call coming from Berenberg, upgrading DraftKings to a hold with a 42 to 50 price target. The analyst seeing limited downside after shedding 40% from its record high back in March. That stock is down 1.45%. The second call from RBC, downgrading Dollar General to Sexta Perform. The analyst expecting a challenging environment with inflation boosting.
Really, I've been keeping all of my winners, including stocks like DraftKings that have been as high as $80. I could have taken a nice profit there, but I've hung on to them, and I don't really see a ton that I would sell. And it might be one of my high.
A lot of stocks here rotating towards the downside. DraftKings down 4.7%, Upstart 5.2%, Affirm 5.6 here, 5.35 rather. Up HUD 8 down 8%, Big Digital 8, Marathon and Riot really losing there at 11-13%. It doesn't have 10x Genomics, Twitter, Palantir, DocuSign, UiPath, DraftKings, Invitae, and so on and so forth. Very, very, very different investing styles for extremely different world views. Check out the amazing
only stock to be in all 6 of ARK Invest's funds: DraftKings, DKNG, Skills, SKLZ, and Berkeley Lights, BLI. All of the stocks I just mentioned are in ARK Invest's top 50 positions when you combine their funds, and all of them have seen increases in share count by 20% or more in this month alone. Even
Redfin, EXP, you've got Twitter, DraftKings, Macy's.
Now as well. DraftKings, ticker symbol DKNG, drop in the first half about 28%, big rally in the second half, over 20%. These are huge swings. ARK Invest's position in DraftKings is bigger by more than 50%. The last one on our list is Skills, ticker symbol Coinbase, ticker symbol COIN, Twitter, DraftKings, UiPath, and Skills. You can find my deep dive into what Cathie Wood has been buying during the recent bottom for growth stocks in the top right-hand corner of your screen right now.
Are you talking about like DraftKings and sports betting? I'm a big fan of sports betting and DraftKings. Yeah, so I'm not sure what you're asking there. So, okay. All right, let me quickly grab Coin and AMC here. Let's see what we got. So AMC right now is showing as a percent of float short
13.47%.
Yeah, almost doubled. DraftKings, the king of the drafts, bounced very nicely from its dip in May. Clove broke out into new highs earlier this week, solely the squeeze attack. But
after another company taking a short position against DraftKings in its latest report, the firm questions DraftKings' promotional spending and alleges that
DraftKings actually moving up slightly here into the close here. We were a little higher on the day, still down 4% on DraftKings. We did add. So DraftKings down right now about 4.6. So got about 5% on. No, we're about 6% up on that. Bought it when it was down about 10% this morning. Waiting for a potential pop tomorrow. We'll see what happens. Right now, I want to see the actual report. There we go. It can hide its black market operations. Oh my gosh. DraftKings has been considered one of the most successful deals in the recent wave of SPACs. Company went public in a three-way merger. Blah, blah, blah. Gaming. Okay, got it. Unbeknownst to investors, DraftKings merger with SB Tech also brings exposure to extensive dealings in black market gaming, money laundering, and organized crime. What? Delicious coffee. All right. Based on conversation, multiple black market clients of DraftKings front entities through searches of social media. All right, so this is an interesting summary. This is going to take a little while to break apart. I don't think we're going to be able to break this apart in the next 5 minutes here before the market opens. But I would like, you got to love their hit pieces. Usually we are short shares of DraftKings. Yeah, no kidding. I love this so far. Place of busted major. This is all regarding DraftKings, in case you're wondering right now. Okay. All right. So what does this have to do with the DraftKings? Somehow linked to DraftKings. That's what they're alleging. Okay. So Betway, BTI's sportsbook is advertised through a site. Okay. So wait a minute. You have got to be kidding me, Hindenburg. What? Is tied to illegal gambling activity because this random Betway 88 group got busted for running an illegal shipping container gambling system or site or operation out of Thailand. But you mean to tell me that this company is somehow tied to DraftKings? Because the website that Betway used put the BTI logo on their website. That's it? That's all? What? Let's look at that. Okay, so I want to see the conclusion. Is there one? The case was handled by June 18th. Oh, it's actually very short. Here we go. These are the allegations. Okay, here. The investigation found and this is old news, right? This is old news. That DraftKings misled casual and novice players about the substantial advantages of high volume and professional players, which included using automated computer script and sophisticated statistical and game theory strategies. This is not the move I'm looking for. I'm looking for 12%. That's nice.
So DraftKings, the king of drafts, had a tough morning. A lot of drama with some short seller out. That DraftKings has black market connections. They said DraftKings' merger with Bulgaria-based SB Tech has opened it up to exposure linked to black market gaming and money laundering.
One actually in the case of DraftKings, which it combined with another business, and then you get the merged company trading. So that's sort of a different route, clearly, than the traditional initial public offering.
So Dave, help me argue against myself earlier when I was talking.
Green's falling. Poshmark is in here. EXPI falling. We got Roblox, Nordstrom, DraftKings, JP Morgan. We're going to see some sort of rotation here with the recoveries. This one, DraftKings and the iGaming have been a little harder to really put our hands on. We know that the longer-term uptrend that we've had here, which you could really extend back to about here. Here's the DraftKings buy. Here's a Go EV option. I bought and sold it, down about $850. That kind of sucked. Clove. This is when I bought my SoFi option. Clove, I threw in $61,000 on Clove on 4/16, and I pulled out a net gain of $5. They weren't huge trades.
$26,000 in on DraftKings for a few days, made $5,700. Was not in that long. This was like 3 or 4 days. Nah, it was probably like a week. Maybe it was a week.
With a new short call on the stock, it's based on alleging that the merger with Bulgaria's SB Tech brought exposure to extensive dealings in black market gaming, money laundering.
Actually is losing its taint. DraftKings is becoming a platform for sports betting. States in crisis with huge deficits are going to capitulate one after another. And then one of the most mature betting states, New Jersey, DraftKings reported last week, its revenues were up 100%. Again, this was another stay-at-home beneficiary, so people said, we're going to get back to life as usual. This is going to be part of life as usual, and so.
The reason all of these matter is because DraftKings is a leading mobile online betting platform, and all of those words are contributing to their massive growth rate. I agree with Cathie Wood, surprise, surprise, that a lot of these factors will become a part of life as usual, even as things open back up. However, I'm trying to be better about backing my opinion with data on stay-at-home stocks out there. So let's listen to DraftKings' CEO, Jason Robins, talking about these same factors and how DraftKings' future is affected by the reopening economy on CNBC's Tech Deck.
And the season at large, as this economy reopens, I guess, can you put into perspective the tailwinds that you're expecting for the rest of the year relative to where we thought we were going to be, say, about 6 months ago?
We should look for in future earnings reports. So let's talk about SB Tech, which is DraftKings' betting engine and the major focus of the Hindenburg Research short report. SB Tech allows DraftKings to have their own predictive betting engine instead of having to rely on an existing outside service. This isn't really about cost cutting, it's about being vertically integrated and having the ability to offer tailor-made bets that are unique to DraftKings and can hyper-target individual users. This is about adding market differentiation and increasing user retention. And it sounds great on paper, but just how important is SB Tech to DraftKings' long-term success? Here is some much-needed context from none other than Jim Cramer on a recent episode of CNBC's Market Alert.
Did you look at DraftKings, by the way, since we talked about it yesterday?
Yeah, well,
right?
I mean,
we had the Hindenburg report, and then we had another report that Cathie Wood
bought 900,000 shares.
$42 million worth.
How many divisions
Not
does Hindenburg
insignificant.
have? You know, with Hindenburg, this is, I think, I mean, look, again, I work for DraftKings. I think get rid of that one division, of which you could. I think that what matters with DraftKings is gambling, whether more people will gamble and whether they have a low cost of acquisition. That's what matters, not this division that they can get rid of tomorrow. So Cathie Wood, I think, ultimately is going to be right. If you have an NFL
itself point out, SB Tech accounted for about 25% of DraftKings' revenue at the time of their merger in April of 2020 and accounts for less than 10% today, just a little over 1 year later. By DraftKings' own projections, it could be less than 4% of their total revenue when they're fully up and running. Even if these allegations were true, unless we find out that DraftKings knowingly profited from these illegal activities and the government gets involved or DraftKings' partners start to leave, I don't really see these allegations as meaningful. Leagues and competitive games find themselves increasingly focusing on interactive experiences and mobile content, which is the current trend. DraftKings offers a serious avenue for partnerships and licenses, similar to Skillstock. They can
They're
also
on Roku. Looking at these DraftKings here, actually looked like a block sale coming into DraftKings with a little buy thereafter. Churchill Capital falling a little bit into the close, still up 1.19%. Starbucks up 1.13%. Palantir relatively flat today. Let me see how it ended here. Just like Piton, still considering DraftKings. Still paying attention to this one. You know, we broke our big uptrend. We've been trying to start with new uptrends here, but yeah, not superb here. Somebody just asked the question here. Bert's account, Stocks and Psychology of Money purchasing today.
with $720 million in it. DraftKings, ticker symbol DKNG, after Cathie Wood almost tripled the number of shares ARK Invest holds in it. DraftKings. Palantir, PLTR, 10x Genomics, TXG, Beam Therapeutics, BEAM, most draft.
Insane path here. So then we've got DraftKings. DraftKings also down. Let's take a peek at DraftKings for a moment. Oh, that's G-Tech. Let's go off of this. Let's go to DraftKings. Okay, here we go. So here's DraftKings. Jeez, but this is almost the definition of the market that we've seen. A little bit more than 1.25%. Tesla 1.22%. Towards the downside, we got Emrin, BTX, Big Digital. The green stocks that you're saying green are green. I mean, even DraftKings, hey, people sports betting from home, right? It makes sense. Personally, I believe this rotation to COVID 2.0 stocks is a little overblown. I think the bigger reason why, and I want to clarify that, okay, because I had to clarify that on my live stream too. I don't mean to say that
the more obvious growth plays like ChargePoint, Neo, XPEV, DraftKings. If you haven't heard, DraftKings is actually the king of drafts.
Square 4.28, very nice. Square reporting soon. That could be interesting. DraftKings. Yeah, this is a big week of earnings here. Very interesting. Last year, DraftKings almost did a 2x from the start of the football season to the end of September. How would you play that in the options market? Oh, man. Well, I mean, if it did a 2x, obviously in a short period of time, you'd want to own call options, right?
Basically as fast as Zynga, but it's also a little bit of DraftKings. There's a little bit of peer-to-peer stuff going on over at Skills. I don't know if they're going to have regulatory troubles in the future.
Because gambling is wrong. Oh, I can't buy this stock because it's led by a Republican.
PM in New York, 8 p.m. in London. This is Bloomberg.
It's kind of been coming up again.
Thanks very much. All right, coming up, a golden deal. DraftKings is buying online gaming company Golden Nugget in a deal worth about $1.5 billion. Tillman Fertitta, owner of Fertitta Entertainment and Golden Nugget Casinos, joins us next. This is Bloomberg. Well, joining us now with more on the acquisition is Tillman Fertitta, sole owner of Fertitta Entertainment, the restaurant giant Laundries, and the Golden Nugget Casinos and Hotel, and NBA's Houston.
We use this term best in class, and DraftKings is definitely best in class. They're a tech company. We're a bricks and sticks company, and this is a great opportunity for them to come into Fertitta Entertainment and pick up all of our databases from the Houston Rockets, from Landry's, from the Golden Nuggets 24 Karat, from Select Club. And there's a reason their name's DraftKings. They're going to be the king of sports and iGaming. They're the best at sports betting. We have a great platform of iGaming, so combining the two is going to make it really special. And there's a reason I wanted it to be an all-stock deal. But in the beginning, and we felt like DraftKings is the best from a technology standpoint, a management standpoint. Jason has an unbelievable team that he's put together. And this isn't what we do. And I felt like, why shouldn't I ride their horse and take their stock at the same time?
And you clearly like what is happening with DraftKings. Why not go direct?
Because we did not, this all happened so quick. Everybody forgets that this was not a huge industry. Everybody has to remember where even DraftKings was a year and a half ago and 2 years ago as a company, and where we were as a company a year and a half and 2 years ago. We never had talks. We didn't know where this industry was going. None of us, not DraftKings, not us. This is all something new in this new America.
So, Tillman, talk about something new. COVID and then now the Delta variant. If we'd had this conversation a few months ago, it would have been a little bit different. But now, how are you dealing with the Delta?
Okay.
Ticker symbol SRNG. If that name sounds familiar, it's because DraftKings did a SPAC merger with Diamond Eagle Acquisition Corp, and Skills did one with Flying Eagle Acquisition Corp.
And iGaming. So DraftKings essentially buys users across both platforms, the sportsbook and the online casino. And one of the most interesting things I thought in the Golden Nugget most recent earnings presentation was they're finding online casino revenues in 5 states. Really the next bull case for DraftKings is the fact that their market is not done yet. Big names involved with this company: Tom Brady, Wayne Gretzky, Derek Jeter. And you can see already here, they had the Tom Brady launch last week. No surprise, everything sold out. It's on there, and each time this stuff happens, I think DraftKings gets 5 to 10% out of each sale. All right, so that's the bull case for growing revenue beyond expectations for DraftKings. What is the bear case? Number one, of course, is competition between BetMGM, Flutter Sports, which is FanDuel. You've got Penn Gaming and dozens of other small players, okay? There's no EPS. You're basically running at a negative margin to come out here in these first few years and build the business. So any little sidestep along the way can just tank the stock. How has DraftKings been valued from a multiplier range over the past several quarters? I'm going to skip right here down to price to sales, trailing said not profitable. You do have, at least on Seeking Alpha, you have the first profitability potentially of fiscal year 2027, $0.29 billion. Fiscal year is same as the calendar year. All right, so my projection would come in January or February of 2022. So depending on what comes out of DraftKings' mouth as far as what they're guiding, I'm going to say it gets really close to $2 billion. And when you factor in that this is a forward price to sales of 15, that would bring your price to $80 for DraftKings, somewhere in the neighborhood of January or February of 2022.
Let's see, what else is in pain? DraftKings kind of been trading sideways, not exactly at a particular bottom right now. Yeah, that's one to pay attention to as well.
You got a big subsidy for it. Would you convert to it? DraftKings is up a bit today ahead of their analyst heavy conference panel tomorrow. They also announced a multi-year deal with Simplebet, where the king of drafts will be using their technology to engage with their sports by what's called micro betting. Betting play-by-play, throw-by-throw, and pitch-by-pitch throughout a sporting event. It also allows DraftKings to offer micro-betting products for the NFL, the MLB, and the NBA. I like that idea of being able to bet on individual moves play-by-play.
Is it necessary to click on this particular article right here, based on that title? It's like, ARK Invest Cathie Wood scoops up $60 million in DraftKings. Okay, got it. What are you going to say? Well, other than you have to sign in. Yeah, the headline is the article, right? That's what I'm talking. Yeah. DraftKings this week. Cool. Moves a little higher. DraftKings agreed earlier to buy Golden Nugget. Partnership with Genius Sports. Okay, so they put in a little bit of other background. So, okay. All right. I mean, it just, I don't know how valuable that other background information is relative to the title. It's just, title is the article. DraftKings is going to explode revenue when the crash hits. Destroyed. DraftKings is actually doing very well. If anything, you know, maybe DraftKings is something to pay attention to right now. Let's jump in over here. You've even got EXPI. Well, EXPI 45.
Distribution platform for some of the most popular games on the of which, let's look at fintech next. Coinbase, DraftKings, and Robinhood all sit inside the same three ARK funds exactly.
Tesla, we're going to talk about Tesla in just a second. Canoe rotating down, Neo rotating. It doesn't surprise me that the other auto manufacturers are rotating down after Tesla. Redfin. Okay, what are our bigger fallers here? Robinhood, 1.7. Big Lemonade, 2.6. Up a full percent right now. Nice. Yeah, DraftKings been on a nice little rotation here. Let's zoom out a little bit and then look at Bitcoin and get that bell. So let's go to the average candles here. Yeah, look at this. DraftKings has had a nice little run. Let's go to
we have link out deals with Caesars and DraftKings. You know, we are bringing this all together. We are doing alternative broadcasts, betting themed alternative broadcasts, as I just mentioned on the NFL side. But we also had an NBA themed broadcast last season. And so, look, there's continued momentum in the industry. I think now 24 states.
They're both expected to come out at 405 and 405. Yep, both of them at 405. So, and DraftKings CEO is coming up on CNBC. That could be interesting. Side Planet 13 bleeding out at 460. DraftKings
certainly be buying at $20. All right, what about DraftKings? And DraftKings is very interesting because they're heading into their peak season. This is a very seasonal stock, summertime, a lot of low sports news. Now we're in football season, and you can see on this year to date how we've sort of popped back up
as well. And if you
few minutes by the company, it has received a stock and cash proposal from DraftKings of the United States. It is urging that no action is taken. But as you can see, stock's up quite nicely on the back of that. 18.25%, Alex.
Yeah, it's like M&A Tuesday. All right, so here we're definitely seeing some tempered enthusiasm here. So S&P now flipping negative, as Guy was just pointing out.
Finishes up the day here. You've got this DraftKings deal, which looks like has been made at the moment. Entain is saying take no action. It's a stock and share deal at the moment. We're trading up by 18.4%. We'll wait and see exactly how that deal crystallizes a little bit later. This is Bloomberg.
Enphase is pushing for us to get a better deal.
I'll show you what's happening there. The DraftKings bid certainly continuing to drive that stock higher. Bottom end of the market's the safer end, so we're rotating back in to the more riskier end of the market. Healthcare, utilities, real estate, where we're seeing the weakness. So let's show you what the price story is in the single stocks. Entain.
Earnings season to come for car makers. DraftKings has offered to acquire UK gambling firm Entain in a deal worth more than $22 billion.
Okay, Instagram's no place for kids. DraftKings puts all its bets on Entain. Boris Johnson mocks French outrage. Okay. Get some real news here. We're going to have news soon with Jerome Powell.
In my opinion, that shows that ARK Invest's 5-year outlook on these companies is slowly but steadily increasing over time. Outside of these massive positions,
got annihilated, and right now, it may be ready to bounce. It actually may be ready to bounce as long as it doesn't drop below that level. You're gonna see some consolidation first.
ARCT, Verisight, VCYT, and PagerDuty, ticker symbol PD, are even more interesting because they increase to the point where they're nearing ARK Invest's top 50 or even top 30 positions overall, out of roughly 100. Stocks like Coinbase, Robinhood, Square, PayPal, Shopify, Teladoc, and DraftKings are both in ARKF and ARKW. That's one reason for my confusion around why Cathie Wood kept JD, Pinduoduo, and Tencent in ARKF, but sold them out of ARKW. Next door is a reports like this one, the one against Ginkgo Bioworks, the one against DraftKings,
Alex,
and so
coming
on.
under real pressure. Supply chain issues are a massive problem for this sector and this company in particular. And the CEO stepping down. Initiated coverage on DraftKings, but they're not convinced that a DraftKings Entain bid here in the UK, that's where Entain is based, is actually going to happen. Why not? There's been a lot of speculation. There's been a lot of chatter about this. Bloomberg's Thomas Seal here with me now to talk about this. This was the expected sort of part.
Owned by Entain and it's half owned by MGM. DraftKings has to find a way to unpick that and either strike a deal with MGM or sell a license to the underlying technology. This is the secret sauce that really makes it valuable. So meanwhile, Entain is growing super fast. It rejected an offer in January that was worth $11 billion. It's already valued more than double that. Concerning to Entain shareholders or Entain's board is that the offer from DraftKings is mostly stock, DraftKings stock. And UK shareholders may not want to accept that as payment. The stock is quite volatile. It's already down 30% in a couple of months. So, you know, all of these things mean that the market is really not betting that this deal goes ahead as proposed.
That could come in here if the specifics of DraftKings weren't to Entain's liking?
It's a really good question. No one's been flushed out yet. MGM obviously was the previous suitor back in January, but it hasn't made a move. It has, MGM's CEO last week made some really important comments that they do see a path to controlling BetMGM. That is, you know, the jewel in the crown.
Plug Power DraftKings finally moving again. QuantumScape.
Even the sellers who try to keep the stock down, and by the sellers, again, for those of you who are new, who may not know how to read the charts, these individuals right here, they're sellers right here.
Level right around there. DraftKings only up about 0.52% after news of its Polygon, or should I say Matic partnership on NFTs. So that's that'll be interesting to see how this develops. Heard that. Let me see here. Let me see draft. See if I can pull up the news on this. See if there's anything particular on DraftKings today. Polygon teams up with DraftKings to support NFTs. Wow. That's actually really good. Polygon, NFTs, DraftKings. Oh. Let me go to, more importantly right now, DraftKings. Yeah, DraftKings is happy right now. Moving more on that NFT news. But then again, they had that NFT news in August as well.
Here. Friday after the bell, you have DraftKings reporting. You know, I've never been interested in DraftKings. I don't know. It's just not, you know, if I'm going to play gaming plays, DraftKings just isn't the one I'm interested in. Coinbase is going to be reporting, so...
Friday, you have the king of drafts, Coinbase, Excella, CGC. DraftKings is looking very, very juicy, as is Excella, and we'll talk more about that later. Only operated in a handful of states, and its expansion plans are going to take a while. However, I tend to have a very, very mechanical way of looking at high conviction stocks. When they are discounted below what I see as fair value, I see them as buys. When they are trading above what I the current markets and legalization expands, DraftKings will be incredibly competitive, and I think that states want sports betting. Why? Because it's a great way to raise money for taxes, and a lot of states are bankrupt and they need money. Plug. So context, before Plug's annual symposium earlier this month, we talked about how last year's symposium
But okay. And DraftKings up 5% today. That's cool.
DraftKings, Ginkgo Bioworks, Peak FinTech Group, and of course, Tesla.
Buy the dip. We'll talk about that and more on today's show. What is going on, investors? Time to talk about a DraftKings Incorporated, ticker symbol DKNG. This company's got a $19 billion market cap. We'll talk about more of that here in a second. Let's start with the good. The Q3 revenues came out over at DraftKings, $213 million in the quarter. That is a solid year-over-year revenue growth. I tell you what, when you got this type of short interest, you better be growing that top line by the mid-60s, I think, and that's what DraftKings essentially did. Now, they did miss by about $25 million. I don't think that's what's sending the stock down. Now, I am recording this during the trading day. There's still 4 or 5 hours left to go in the trading day on a Friday, but the stock is trading down by about 1.57%. I think more of it has to do little bit rich from a price to sales basis over at DraftKings. The other thing that you have to factor in is what smart money is factoring in when we're looking at DraftKings. Man, this company is just absolutely burning money like a problem gambler. Take a look. The last 3 months ended here in 2021. We had revenue coming in at that $212 billion. That is up by about $80 million year over year. Okay, you were sitting at 132, but here's what I want to show you. Worth of convertible note. This is a company that's going to have to continue to raise money because stadiums, okay, those people don't always take stock of DraftKings, although they have created some partnerships there.
All because there's almost no research coverage. For every DraftKings, there's 10 others that you never heard of. And I've been trying to understand them. It's very, very difficult.
This has been your complaint for a while.
Oh, my. So when I see these, it's like piling on already. I study them because of the lightning round, because people constantly ask me about them. You know.
Oh,
right. Because there were so many upsets. Hey, DraftKings finally gets its upsets. Maybe we should buy some DraftKings.
Right. Hey, Bengals. I don't know, 2 straight weeks of just back in the morass, back to 30 years of my life with that team. Good God.
Yeah.
All right. Thanks, Jim.
Finance channel. DraftKings stock is a stock that I own in my portfolio, and I haven't talked about it for several months, so I thought I'd do a quick update on DraftKings stock. Monthly unique payers. So this is an important metric because you're looking for people who actually make a deposit. Now, you see they launched these micro betting, which is just, like what's going to happen on the next play. Is it a run? Is it a pass? Stuff like that instead of betting on a whole game. And then have a core of daily fantasy players to kind of play off and pitch things to. They did not have that in Arizona, so it's good to see this response rate. All right, this is just some of those new micro bets for why that's important. Here's hold percentage. So we know hold percentage. All right, taking a look at tip ranks to see what the best performing analysts think of DraftKings right now. Again, you're going to struggle with fundamentals, so you just sort of have to see who's a bull and who's a bear if you're getting into this one. We've got several over the past, let's just do 11 days here. This is going. I'm not going to sell my DraftKings. I'm barely going to look at them. All the things. We will see you.
Beyond that, we have partnerships with DraftKings, with Rolling Stone, and we translate that into perks like surprise and delight events, as well as free DraftKings dollars for our users.
All right, that's very, very interesting. Next game. Who?
Now, that sure wasn't the case when DraftKings came public via SPAC a year ago. It looked like they had the whole field to themselves. Then Penn National Gaming came in, real rivalry begun. They did that deal with Barstools. Then the companies with no real cost of capital, the casinos got in the digital racket. Next thing you know, profitability's been squeezed while the cost
being held in this company. Okay, on to stock number 7, we have DraftKings, ticker symbol DKNG. With a weighting of around 1.8%, this makes it the 16th biggest holding in ARK Invest funds. That puts them in the Innovation Fund, the FinTech Fund, and the Next Generation Internet Fund.
And then, right, the de-SPAC names. I mean, if you look, whether it's DraftKings, whether it's Open Door, whether it's Skills, I mean, you name them, something was going on today, but it's something that actually really has been going on probably for 6 weeks. So I think there's two different dynamics here, and I think technically you're starting to see some of those breakdowns accelerate.
I know that some people, DraftKings has a huge amount of insider buying. Huge amount of insider buying.
More today, in fact. And Robbins last week, right?
Well, I think Jason's saying Arizona is going incredibly well. Arizona is the fastest.
They still harbor ambitions to obviously get larger quicker.
Yes. Runs the best at DraftKings, but there's so much competition. Let's not forget Penn Nat.
Yep, that's right.
But Penn Nat has very small market share, but obviously they have aspirations.
Yep. Yeah.
Everyone has aspirations because people think it's the Holy Grail. I don't know. Is everyone?
Zillow's down 48, Teladoc, which he mentions, down 27, Roku 24, DraftKings 21, Robinhood 20, Palantir 20, Chegg's off 78% from its high, Zoom's down 57% from its high, Twilio 40%, Square 28%, and then you have the FANG stocks, which have done decidedly better. What I find so interesting is that you continue to place your money in those stocks, even as they've had their own.
I mean, what do you do with some of these names? And DraftKings and Robinhood and Bumble and Roku and Beyond Meat. Go on and on. These things are all off 40%
Well,
from
they
their
were
highs.
part of an era.
And by the way, in a very recent period, let's call it the last 8 weeks.
Well, look, these are all now regarded as being areas where a lot of companies have come public.
Variety of internet companies like Tesla, Teladoc, Shopify, Roku, Spotify, Twilio, DraftKings, Palantir, Etsy, DocuSign, and Nano Dimensions.
I look at the list of like the Peloton, Zillows, Lemonades, Roku's, Pinterest's, DraftKings. They're all down, like 75%. I don't think that many of them are going to recover because they do not have the earnings growth to have supported what the previous.
We're in the height of the gambling season coming up. Penn Nat and DraftKings, they may go down later, but right now, I think to sell them is a mistake. It's just, whoa, they're bad. But to sell them right here is a mistake. Let's go to Kenny in South Carolina. Kenny!
Booyah, Jim Cramer. You are the man.
Wow. C3AI, you've seen that pain. DraftKings, you've seen that pain. Look at that. It's been an incredible.
Has been one of those stocks, right? Beam Therapeutics, then you have DraftKings, you have another therapeutic company, you have this 10X Genomics company, you have this company, obviously you got the Hood, Robinhood, which they're just going through a tough time with a lot of retail investors left the market because they got destroyed this past year, right? And they're like, I'm not.
Well, we'll get to all the numbers.
I mean, not everything's DraftKings.
No,
right?
I mean, listen, Gensler, new rules around marketing practices, tougher disclosure requirements, better alignment. Of course, we've talked so often about the alignment of incentives between the SPAC sponsor and the investor. That's it.
But look at some of the relative prices that we have here. Yeah, DraftKings up 7%, but look how far down this thing is. I mean, DraftKings, you're selling on DraftKings, you're selling for May of 2020 levels over here.
Which is actually very, very conservative, and DraftKings 100. I don't know why, but for some reason, a lot of people were extremely bearish on Tesla, except one or two. Then we have Octavio, Tesla 612, Apple 150, very close. Square 250 was closed a couple of weeks ago. Lemonade 100. Most of us were extreme.
Okay, so lots of red, obviously. Has DraftKings had hit a floor yet? That would be interesting. Arcimoto, DraftKings is only 12%, and Tattooed Chef. That seems to be, those are some of the biggest short interest plays right now. And I think we're going to see this play out a little bit, where if we start getting 10% runs on like Tattooed Chef, Lemonade, Corsair, and whatever else the other one is, Shift Technologies, right? A lot of things to choose from.
These stocks are at least 40% down from their recent highs. All of them are currently top 50 holdings.
Ay. DraftKings getting whacked. Neo's breaking through the floor. That's scary. Corsair, that's another one, or Tattooed Chef, right? Although Corsair's moving a lot slower here. We do have an upper line here at Corsair. I think it could be a sign.
The same go big or go home ideas from digital players like FanDuel and DraftKings to old school casinos like Caesars, we're all Caesars, to foreign outfits like PointsBet looking to cash in on a growing market. And competition is just plain old bad for business. Now, once every state allows gambling and we get some murders here, I think there'll be a lot of money to be made. Penn National's very well.
Well, I mean, look, I like Palantir. I own DraftKings. Karen talks about Zillow. I kind of agree with a lot of these. So these are stories that, for different reasons, got tweaked significantly higher. I just think that we're going to have a fascinating conversation with Paul Sankey later on in the show. I mean, think about some of these.
My opinion on DraftKings stock is stocks that Cathie Wood actually owns. The stock is down over 45%, year to date. Now maybe another 52-week low at $28. And I'm sure most of you are familiar with DraftKings and all those three key markets. And I don't know about you, but whenever I think of online sports betting, the first thing that comes to my mind is usually DraftKings. It's not really FanDuel. It's not like, I don't hear it much as I hear DraftKings, because mainly DraftKings, is spending a lot of money on advertising to get the name recognition to be able to monetize it later in the future. And we could see that really in the numbers a little bit. For example, their average revenue per user, it increased from $41 in 2020 to $61 in 2021, which indicates then the company can be profitable. But in case of DraftKings, it's going to keep spending that money forever. And not only that, if they just reduce the marketing to zero, they're still losing $250 million, which is something I don't really like. Like, how can the company ever be profitable? How can I see that? It would have to grow revenue massively, really you have to be comfortable with if you really want to buy DraftKings. Now, in terms of valuation, you may think that, DraftKings is not, really a high valuation at this level, but it still is. If we actually compare it to other players in the industry, like, for example, Penn National Gaming, which owns Barstool, FLTR, which is the company that owns the leader, FanDuel, and Caesars, for example, which also have their own platform. We look at DraftKings, it's sitting at a price to sales of around 10. Okay, and now the second one, which is the leader, with over 40% market share, and it's also a global leader, it has only a 3 times price to sales, Caesars 2.5 times, and Penn National Gaming 1.5 times, which they have Barstool Sports, it has around 5.5. They don't have to do anything. They are cash flowing machines, which gives them an edge over DraftKings, which is a pure online sports betting player. But the company is actually expected to grow, massively for years to come, 20, 21, 19, 20% revenue growth, which seems fair for something like DraftKings. And I use these gross numbers in my model. By the way, that's a new model. Please let me know if you actually like it or not. And this is the numbers I use: 48%, 34, 24, 21, and 19. So basically around 30% compound annual growth rate, which I believe is fair for something like DraftKings. In terms of multiple, I tried to use PE first. It just wouldn't really fit on it because I couldn't really estimate how much net income margin could it really have in the future. So I just basically used the price to sales, as the company is not going to be profitable for a long time. So basically 5 years out, you're still going to double your money on DraftKings stocks, over 16% compounded annual growth rate, which is really not bad at all. Now, is DraftKings they buy? Yes, if you want to buy it, you could. But if it was my choice, honestly, I would buy something like Caesars, Win Resorts, shows that they could use to grow this one over there. But if you're buying DraftKings, you're going all in on the online sports betting. And who knows what happens with this industry in the future? Nobody have to be able to grow. So this is my personal opinion of DraftKings. If you enjoyed today's video, press like button, subscribe if you can, and I hope
on your phone. This is a new regulatory measure passed by New York. DraftKings, among 3 other companies, now can do this, now can offer this. It rallied about 4.7% on the news yesterday. That rally is continuing in the pre-market session this morning, up 2%. And finally, GameStop, really the big pre-market mover. It is a meme turducken of a meme stock offering NFTs. GameStop